Good afternoon. Hi, everyone. This is Paul Lange from Discipline Trading Strategies. You probably know that if you're here. There's always a lot of new people. Every once in a while, I like to just take a 5 minutes and run through who I am for people who don't know, but we're not going to do that today because I don't have time. So, like I always say, I did last time I did an event, I was a guest at somewhere. And I kind of get a kick out of myself sometimes because I just said to everybody, you don't really care who I am, right? Unless you like what I have to say. So at the end of this, I'll tell you who I am. And if you don't like what I have to say, you won't be here. So why waste my time at the beginning, right? But anyways, one of the emails is going to go out was supposed to say today, this is really going to be a good one. You know how I kind of rate them? Like I kind of put the finishing touches on, the afternoon of, like just the last 3, 4 hours. And, sometimes I'm like, this one's, they're all good, I think, but some are okay. And I let you know in the email. I say, hey, this isn't one of the best ones, be a little boring. This one's going to be an excellent one, I think. In terms of usefulness to everybody, there's going to be some charts. There's also going to be some good stuff because charts aren't always the best thing to do in these. But so let's get right to it. And if you have any questions, we can do them at the end, all right? We all set here. We're set. Got everybody here. Got sound. We're good to go. All right. This was emailed to you. You know all about that. That's what we're going to talk about. So let me go to the first real slide here. What tonight is about. Some introductory comments. I want to preface tonight a little bit. And then we will look at some common concepts of successful traders. And then we'll look at some common concepts of new struggling traders. Pursuing excellence. Here are several items that breed success and several items that most that struggle seem to have in common. Why am I so qualified to talk about this? Well, I started out trading myself a long time ago. I didn't know a stock from a bond, and I had to go through the process that I think a lot of people did. I guess we're getting, I have to say 22 years ago now. I always say over 20, but we're actually at 22. And I also, along the way, have been involved with teaching people for a long time. And because of that, it came to me very, very early, as early people. The things that they would say would be things I would relate to because I did it. And all the time when I talk, people say, oh, how'd you know that you're talking directly to me? The thing is, we're all pretty much the same. So it's not very hard for me to tell you, at least the bulk of you, probably 90, 95%, either what you've been through if you are doing pretty well now, or what you are going through if you're in the process, or what you're probably going to go through if you're brand new. So a lot of people find it very helpful, and that's why these events are fairly popular. Some introductory comments. First of all, I want to qualify this as in everything I talk about. Everything I do in trading in my life is, I think, more about statistics. Show me the statistics. Don't tell me your opinion. And what I'm speaking to is to the vast majority of people the vast majority of the time, but there are some exceptions. So if you're consistently profitable, don't be offended by anything about to discuss tonight. I could possibly say something is stupid, and you may email me later or speak up now and say, Paul, I do that and I make it work. Okay, I mean, that's, difference for all. But, I'm talking literally 99% of people I'm talking to when I discuss stuff. What I don't really, I'm going to use the word tolerate, what I can't really tolerate is somebody who is losing, doesn't know what they're doing, and then they tell me that I'm wrong in telling them not to do something. If you're doing it wrong and you're losing money and I tell you it's wrong, you might want to accept the fact that it's wrong and try something else. Both the categories of concepts, meaning both the traits of successful and the common characteristics of losers, cover the vast majority, but there are always exceptions. But if you are struggling, start to get real about what you are doing. And I'd like to start giving some heads up here and there, because I've been talking to more and more people. There's more and more people coming to DTS. And naturally, when I first started DTS, there's an awful lot of people that just knew me and followed me from over the years. But as time goes on, I am pleasantly surprised to find out just a lot of people are coming here who did not know me before they came to DTS. A lot of people seem to like the videos on YouTube, videos of these events and stuff like that. So there's a lot more people that I'm hearing from, and I'm hearing so much of the same type of thing. It's people, let me tell you my mind summary, since I'm not discussing any particular person and no particular email, but let me give you a summary that is in my mind. Maybe you'll get a chuckle out of it. It's, Paul, I've been doing this for a year. I don't have a clue what I'm doing, and I'm still helpless. What should I do? That's what I get a lot. I'm sorry, but that's what the bottom line turns out to be sometimes. And you're supposed to give a little LOL there to somebody. That was kind of a quasi joke there. But some of the questions I get are just, I can tell by the question, this person is just lost. And as I've always said, everybody is here listening for a different reason. That's perfectly fine. They're people that are just kicking the tires and they're going to learn down the road, and that's fine. That's what you should do. I'm talking to people who are out trying to do this seriously. Like this is what they want to do now, and hopefully you're starting off at a part-time, and you're just not making the progress. So you just need to be aware of that, and that's what I mean by this. Get real about what you're doing. If you're making the progress, great. But if you're long down the road and you keep hopping strategies and what you're doing and you're just making no progress, stop. Either stop and do something else or stop and get some help, whatever it is. Are you making headway on an objective basis? That is the question. Not do you think you're going to get better someday, but if you've been at it for 6 months and you still can't paper trade your way out of a bag or you're losing real money, the question is not do you think you might get better someday? The question is what are you doing? Be objective about it. All right, we're going to get right to it here. Here we go. Successful trading concepts, pursuing excellence. These are several items that breed success. I'm going to start off with this one, and there's a bunch here. I don't have them pre-listed, and actually I can't get to the whole list. I did it again where I have a list that is just way beyond what I can even discuss here. But here's the very first one. There's a book out there called Market Wizards. I actually refer to that book when I am teaching the seminar program a couple times, but I don't think I'd talk about it outside of that, so a lot of you may not have heard of it. And by the way, it's no offense to the author, it's an okay book. It's not a must-read book to me. I bring it up because it has two great points that I think that are just at the heart of what we're talking tonight, and one of them is what I want to discuss here. It's the book Market Wizards by Jack Schwager is his name. Hopefully I took the right picture. Yeah, that's the way it was presented. I didn't cut it off. His name's cut off, but it's Jack Schwager is his name. And it's a good book to read. It's perfectly fine. You're not going to learn any concepts from it. The biggest thing you're going to learn is what I want to tell you right here. The author set out to discover what 25 successful traders had in common strategically. So in other words, I think he wanted to learn to trade the market for himself. And he was a behavioral psychologist, I believe. I read this a long time ago, so forgive me, but I know the concepts. And he didn't want to learn how to trade from scratch. He just figured, hey, technical is the way to go. We figured that out right away because he looked for successful traders who could say what they're doing. So he interviewed 25 successful traders with one goal in mind. What do you guys all do that's the same? What can I take from all of you and say, this is what you all do? Does anybody know, either because you read the book, feel free, or because you can take an educated guess, what do all these traders have in common strategically? Like on the chart, what strategy setup was the thing that they all did? Who knows? Correct. He was shocked. I wouldn't be shocked because I'm a trader for a long time. They had absolutely nothing in common. Nothing. I mean, as I remember, as he described it, there wasn't a single thing that they did strategically. And I believe that. I mean, it's exactly what I explain to people when I teach, is that sometimes people think that they're going to walk out of like a seminar program and then Monday morning, every trader in the world who's trained that way, whether you're in a room or not, is going to be sitting there looking at the same stock at the same moment for the same thing. And that's not what it is. There's no magic strategy. It's learning how to read a chart. And you can take those nuances and do anything you want. As a matter of fact, a couple examples I'm going to show you today will probably blow you away because it's stuff you wouldn't probably think of doing because you're going to think that's not what you're supposed to do in technical analysis. But it is what you're supposed to do when you understand what you're doing. It'll be the example when we get to, there's a section called Be Aggressive, and it's the chart in there that is an example that will just kind of, make you think, wow, why would you do that? So I think that's a great place to start. And the theme of this is very simply that, well, both sides of it, what traders who struggle do is try to constantly find that magic thing, the magic setup, whatever it is. And I find that is not at all what you do. You read a chart, and naturally, I do think you should focus on a couple, 3 strategies that you love, but everybody could have different things and approach them different ways. I'm going to show you another example. Well, it's the same chart, I guess, where somebody could have said to me, well, I would have taken that long up to point A. And what I do is I short it from point A to point B. And I'll explain to you why my way is better, but I'm just saying there's different things you can do in the market all over the place. So that's number 1. And did I have any other notes there? Nope. Here's number 2. Successful trading concepts, pursuing excellence. The next slide, we're going to have a chart. For those of you who can't live without charts for 12 minutes, we're going to be right there. Structure your day if you're a day trader, or structure your month if you're a long-term trader. Structure to me is everything, meaning you have a plan, a concept of what you're doing, when you're doing it, how it's all going to come together. Monday, Those of you in the trading room, how many trades did they take the first 30 minutes of the day? Was somebody there? Monday. Thank you. Zero. No trades. I walked away. I left. I left the first half hour, Roger. Then I came back and I took one trade. That was it. It was just a garbage day. I couldn't come up with a plan for the day. I couldn't come up with a structure. I couldn't come up with setups I wanted to do. Came back and took a shot at one thing. That was it. Nothing. Yesterday was a good structural day, but I ended up just breaking even. Today was a good structural day. Made a lot today, so made up for it. But it's just part of that. You play the odds. You get set up. You get things where they're supposed to be. You get everything in place. And then to some extent, the odds take over. They're not all winners, but you know that you're going to have X number of winners. To me, this is very important. The market pattern in general, a lot of the day sometimes depends on what's the market pattern going into today and or what is the pattern of the stocks you're interested in. Let me explain that. If you're trading the market, naturally you care about the market. If you're trading stocks, you care about the stocks you're looking at, but you also kind of care about the market, right? You kind of care about the market. There's some days where maybe going into the day, the market rallied really strong and you're in a good uptrend, but you don't start playing long there. So there's some days where, 10, 10, 30, 11 o'clock, right? That's the pattern. So you got to say, well, okay, you know what? I got to chill on the longs because they're not likely to go anywhere. Naturally, there's unique stocks and all that kind of stuff. And then there's some days where it's the other way, where we kind of close maybe on support somewhere, and you're thinking, okay, you know what? There's a lot of days, if you're not in as a day trader in the opening minutes, you're done. Maybe there's other entries, but a lot of times your stock is hitting the high or low for the day, the opening 5 minutes of the day. So that whole plan to me is critical. So you're not chasing stuff, and so that you have some structure to what you're doing. For more information on this, and long term is the same thing, here's two references. I'm going to start giving references. There is, you can see the date here, right? Can you see the date? August 25th. And that was this year, so that was last August. The walkaway discusses a lot of this in more detail about setting yourself up as a day trader to a situation where what I do every day is walk away at some point for hour, 2 hours, the whole afternoon, whatever it is, once I'm set up the way I want to be. So that's something you can view. The other one, you're not able to view, unfortunately, but it was just such a perfect example. I wanted to, the seminar students, I wanted to make this point about market timing. And since I have all my long-term trades that are published out there, I wanted to go back and just see for myself, say, hey, you know what, here's all the trades I did, long and short in a bullish environment. How did I time that with the market? And actually, I was blown away how accurate I was in doing what I preach. So we went through a whole thing where you look at the market pattern and you say, okay, here is kind of a buy area in the market, and I was long stocks, not the market, but stocks. And we get to an area where the market may drop, and I was short. And you don't always have to do that because you have unique stocks sometimes. But again, just the plan of not just randomly doing things, but to be structured what you're doing both long-term and short-term. So I put that as my second biggest successful trading concept to look at. And remember, when you go to look at stuff on the free stuff page, you guys know where the free stuff page is, right? But when you go there, I'll put the link here for you. When you go there, make sure you understand that 90% of the videos now are on the archives page because they only keep about the most recent dozen or something like that. And when you go to the archive page, they're not built into the website anymore. It takes you to YouTube basically. So. And if you don't like the website, everything on the website is duplicated at the DTS YouTube page also. Here's the free stuff page. So that video there, the walkaway, you can view on the free stuff page whenever you want to, along with a bunch of others. Have fun there if you've not been there. Next one, successful trading concepts pursuing excellence. Number 3, management should be total chill. I kind of like that word sometimes. What is management for most people, everybody? Not necessarily you, but at least what do you think in my mind, most people? I know it for a fact because, again, it's the biggest problem I encounter with people. Well, it's just the opposite, right? Yeah, exactly, guys. Just the opposite, exactly, of chill, right? Yeah, you guys have it extremely stressful. And what does that stress bring in, everybody? What does that stress bring in? What does that open the door to? Well, the idiot, but yeah, exactly, all the psychological problems, right? We all talk about psychological problems in trading, and I do too. I mean, it's, right, the 3 legs of my stool. It's the last slide, boom, boom, boom. One of them is, psychology and or experience. And it all comes in because of the emotions most of the time of the management process, right? There's a big thing I think I'm going to bring up on another slide, but I want to mention it here. And that is if you are anything short of tremendously successful, in other words, if you're successful and you're just, I don't need to do anything, that's great. But anything short of that, which would apply to almost anybody, including myself, I'm always trying to improve. The question you always have to answer is, are your trades you're picking the problem? Or are you picking good enough trades, but you stink at managing? And you know what the real crime is? Can anybody fill in the blank for me there? Everybody at all stages of your development, you should know, if you're not where you want to be, are you picking bad trades, or are the trades you're picking pretty good, but you're not getting them to the targets? That's what you have to know. But what's the crime that just drives me crazy? The reason I put on presentations like this. Yeah, forget the fancy trading plan language, yeah, but what's the problem? Yeah, exactly, Stephen, not knowing. They don't even know. They don't even know. I have people that are taking excellent trades and they're losing money because they manage like total idiots. Sorry. And they don't even know it. They don't even know that's the problem. They're trying to learn better strategies and they're already trading like an A+ trader strategically. But they manage like total idiots. So if you don't even know the difference, how can you improve? Right? A lot of people, yeah, right, Mark. A lot of people don't even try to figure it out. I told you a story. It wasn't that long ago. I got a trade from a trader, and he's not a member of DTS. I felt sorry for him. I agreed to get together with him in a chat room for a few minutes and go over his trades because he had some troubling stuff. But one of the trades he sent me, I thought he was bragging. It was a gorgeous trade. It was something I was jealous over. It was just a perfect setup, perfect entry. Everything's great. I'm saying, okay, I guess this is one of his good ones. He wants to brag about it. That's fine. But then I look and he has a full loss on it. I'm like, okay. And what was amazing was when we got together, he never even knew that that was a home run trade. He just sent it to me because it was a loser. That's all he knew. And a couple hours later, he had managed it wrong. He never should have stopped out. He got too tight with it. He lost a small amount of money, which he was happy with. It went on to be the trade of the week for him. It would have made him a whole week's salary. He never even knew that it was there. Never even knew that happened. So management, chill, you should have nothing to think about as management is pre-planned. This is what's so ironic. Management is the one time in trading that you should actually be totally chill. I understand being stressed when you're looking for the trade as a day trader, as a long-term trader, you shouldn't be too stressed. But, market opens, you have stuff you want to do between 9:30 and 10 o'clock, Eastern time, of course. And it may be a little stressful. You're looking at different stuff. You're afraid an entry is going to pass you. You're doing a lot of things. But once you're in the trade, there's nothing to do, right? Is that true, or am I just so far out from reality that nobody even understands me? Once you get in the trade, there's nothing to do. True? You put your stop in place. There it is. You have a target up here somewhere, right or wrong, whatever it is, right? And then you just sit back, right? You may decide that the way you do things is that you're going to do some management on the trade, but you don't make the decision during the trading day whether or not to manage. You make the decision whether or not the management criteria you have set forth for yourself has happened. You understand the difference? Big difference. I get in a trade, here's my target. It takes off. I don't start going, should I sell it here? I have no right to do that. All I have the right to do is my plan says that once I get so far and it pulls back and then makes a secondary breakout, now I can raise the stop. So all my idiot has to do is just recognize this pattern. Oh, gee, I think that's the secondary breakout, so I'll raise the stop to there. That's all you have to do. And there's no stress involved. Of course, what everybody's afraid of is the trade is a little green and then it stops out. It's like, oh my God, you can't make money doing that. But some trades stop out, and you can't try to save that one trade from stopping. You can't kill 20 other trades that would be good trades. Not doing is exactly what brings in all these psychological issues. Next one. An example of chill management. 3 trading days ago was the best example I had. This was AU, Anglo Gold. Entry up there, shorted on that little pop. I like the gap short. Doesn't matter why this slide is about management. And after I got in the trade and, stop is in place, whatever, And I believe my initial target was just end of day. That's my target sometimes. End of day. It's called EOD. There it is, your target based on EOD. Now, whether or not your target should be end of day or some point along the way is a decision you make on every individual chart, right? It's not like there's a universal target or management concept for every trade that you do. This particular trade I felt had unlimited potential to drop, so I wanted to give it the full benefit. At some point, I would step in to manage when I got a certain point. So once I got in this and set my stop, what do you think my first management concept was? Nobody will get this right, not even in the room, because you probably don't know where I'm going. What was my first management concept? Short there, stops, whatever, 25 cents away, whatever it is. Yeah, pretty much, Art. Here's, you've heard me say this in the room, right? I have to leave now before I do some damage, right? You heard me say that before, guys? Got to get out of here before I do something stupid or something like that, right? Yeah. Because I know I'm subject to do that too. And sometimes I want to. I mean, a lot of times the plan is to take something off the table. I'll show you an example of that in a minute so that I can let the rest of the trade go. Again, every setup's different. There is technical skill that you have to say, what is that chart? Where is it a short? What's the potential for it to drop? And then you make up your mind. Okay, I'm going to go for the home run on this one and just let it all go into the day if I can. Or on this one here, could come back. And at this point, I have so much profit, I'm not going to let that come back on me, right? That's just a decision you have to make. But you make it basically ahead of time in terms of how you manage something. So I walked away and I walked back in at lunch, right? Art, this is Thursday. I walked back in at lunch and said, you know what? I'm up a lot of money. Now, let me tell you something. I don't think I would have gotten it to target one if I was sitting there, honestly. I'd be too smart. I would have probably trailed out right here on some of it or whatever. I walked away, and when I came back at lunch, it was down here, it was just on the low of the day. I was like, okay, you know what? There's a lot of profit here, so I'm going to lock some of it there. And I was hoping that actually it would just keep dropping, but it turned out that was a good lock. And then the rest of it I let go into the day. Just end of the day. Wherever it goes, it goes. That's fine. I'm sure at some point I came in and lowered the stop to here when it was down here somewhere, but not the point. At any time your stock hits remember this thing I say a lot, is that anytime your stock hits your target, any management you do costs you money. Isn't that an amazing statement? Think about that, you over-managers. Now, there's a reason that people over-manage, and it's right here is the answer. What is the number one reason people over-manage? Yeah, but probably legitimate fear. Probably legitimate fear, because what's the fear? It's probably a legitimate thing. They probably are afraid, and they want to manage because it goes back to square one. Because they're just not picking good charts, right? I mean, if you have no confidence that what you're picking is going to get to your target, right? If you have zero confidence that you will get to point A, you're going to sit there and monitor it, right? I have a quote from like emails I get, but it was just a recent email. And the basic quote was, I feel like my job is to sit there and protect my profits. Does anybody, give me a one, does that ring a bell to anybody? Like it's something you feel you're supposed to be doing, right? I feel I need to sit there and protect my profits. Anybody? Even in your past? Or maybe you still think that's the right thing to do, right? He said, I feel my job is that I need to sit there and protect my profits. Of course, the context of the email was, help me, I keep getting out of winning trades, right? So you see the problem. So if you got winning trades, it gets easier because you look back and you say, you know what? I just cost myself money by taking profits there. I just cost myself money by taking a stop there. But here's the thing. If you never get good trades or rarely do, your terrible management actually does what? Yeah, right. Your terrible management helps you a little bit because it makes you, look at the last comment, it makes you lose slowly, right? It minimizes your constant string of losses. So you'll take a long time to go broke. I don't know if that's a better situation or not. It may be, because maybe during that time you catch on to what you're doing. So it says right there, if you never hit your targets, then you should manage a lot. And then you will succeed at going broke slowly. And obviously the real message there is, change what you're doing if that's the case, right? On to the next one. This one's going to be a tricky one. I'm going to get yelled at for this one. But I can only tell you what I feel is right. Successful trading concepts, pursuing excellence. Here's the next one. I don't know what number on, 4 or 5. Aggressiveness. Aggressiveness. Are you surprised I have that in there? So let me start by qualifying it that this applies to, this applies to obviously when you have the stats to kind of prove it, right? When you can prove you should be aggressive. Obviously, if you're new and you're clueless and you get aggressive, and again, if you follow the way I teach my students, it's never an issue because you have to earn your way. And it's not just my students, you hear this in the intro class that you're all invited to. You have to earn your way to get bigger and bigger share size. But when you get to bigger share size, there becomes a problem where people then just kind of stop and they get kind of complacent. Is that the right word? I think so. They get kind of complacent in some different ways. You know how I know this is so important, and it is terribly important because there is kind of a right moment to do stuff, right? And a lot of times you don't get the second right moment. And it's amazing how even though you may say, well, if the stock goes up, who cares when you get into it? Well, it does make a big difference because a lot of times then you end up getting out of it. In other words, here's the birthplace of some move, right? And you're supposed to get in right here, and you didn't get in. You say, well, Paul, you think it's going to here. What's the difference? Okay, so you get in late, right, and it starts pulling back. So you get in way late. It starts pulling back on you, and you say, oh, you know what? I'm down half my money already. This is terrible. This stinks. Oh, it's bouncing. All right, good. Thank you, Lord. I'll raise my stop, and now I'm only going to lose a quarter of the money I wanted to. Oh, this stock stinks. All right, I stopped out. And then guess what? Has that ever happened to anybody? Number one, ever happened to you? Like maybe every fourth or fifth trade? See, so that's why I'm so big on the entry is everything, right? Because if you have the right entry, you're not put in that decision. Right? You're not sitting there having to make a bad decision because the right entry, you're golden. And that's what aggressiveness is. It means knowing that that's the time. And you know where it's become so obvious to me where I put this in here as a thing is that if I have a bad day or something, I normally don't care about a bad day, but for me, I have to tell you honestly, it's 100 times worse if I'm running the room. I actually feel bad for anybody following, like, wow, we had a losing day today. I feel bad for people following me, more so than me. I'll live, but I just feel bad somebody trying to learn, and nobody likes a losing day. And I'll sometimes come back the next day and I'll be off because I lost that confidence a little bit. You know what I mean? And it makes you off, and it makes you terribly off. And there's so many times the next day I go, you know what? Any other day I would have taken that short right there. And look at that, it already fell to target one, and I'm still looking at it. So you have to prove the right to use aggressiveness, and it says in here, it must be proportionate with your skill level. I'll give a month to anybody in the trading room. If you can tell me in the next 30 seconds what this guy means right here. Or the name. No, the name. It's a name of a person for which this slide is kind of built around. I used to talk about it. If you've listened to me long enough, you might know it. It's not Napoleon Hill, no. Maybe he looks like Napoleon Hill. It's kind of, I don't know. Not him. I don't even know what Wandela is, I hate to say. Is that Little Mermaid's name? No. I don't have the, what do you call the greased up mustache? Handlebar mustache. And time is up. The right name that would have earned you a month in the room, believe it or not, is Ray Kroc. Ray Kroc used to use the Calvin Coolidge saying a lot about genius being a proverb, but he added something else, and he said that nobody would pay to watch a tightrope walker walk 1 foot off the ground. Yeah, the McDonald's man. Nobody would pay to watch a tightrope walker walk 1 foot off the ground. Without risk, there can be no reward. Interesting concept, I always thought, something I always kept in the back of my mind, but it's true to some extent. We want to manage that risk reward, but you can't sit there and be riskless. And a lot of times, the aggressive thing to do when you know what you're doing is the best thing. So I put aggressiveness there as a trait. But again, this is a successful trait of successful traders, I believe. It doesn't mean that you can necessarily be aggressive if you don't know what you're doing. Let me show you aggressiveness. Here's what you might call an aggressive trade. What do you think of that daily chart right there? Take a look at this daily chart. Nice buy setup on the daily chart. Good long opportunity on the daily chart there. What do we think? Daily chart? Yeah, if you're in the room today. Daily chart, One, two, three lower highs in an uptrend to the rising 20. That's a 20 period moving average. What do we think of that? What do we think of that daily chart? Somebody likes it short. Must be sarcasm in the room. I don't know what's going on. How much do we like that daily chart? Okay, but not great. A plus as a long, right? A plus long. You don't need to type, Steven. Yeah, I like these charts, and I pull them out here though because these are good shorts. Even in today's market, the crazy bullish market, these are good shorts, and you got to know the difference. That's not a good daily chart buy setup. As a matter of fact, I pull these out every time I can find them. Right, room people, seminar people, right? This is a common thing I teach all the time, and I did it today. I pulled this out for a short idea. This is not going to work, and it'll probably keep falling on the daily chart. But whether or not the daily chart, I'm not saying you short this swing trade necessarily. It's just not ready. It's a super strong stock. This is just what you call self-fulfilling prophecy, the dum-dums buying the rising 20. And you notice the whole move came up, the opening 20 minutes of the day. Now, this is the chart I was talking about. Could somebody say to me, gee, Paul, I would have taken that long on the gap down. Okay, that actually is a reasonable idea. I wouldn't poo-poo that. But here's the thing. On the gap down, I just don't know what it's going to do. Yeah, I'll explain, JD. Yeah, you got to look at I didn't put the 15, but the 15 and hourly, yeah, they were key things. But even before it got, JD is talking about, if you look at a 15-minute chart, this is, it's an energy fuel. What's it called? Energy fuel? What's the actual name of this? This is funny too because I had no idea. But this is the 4U's. This is UUUU. And I had, it's funny when I did this thing, I said, I wonder what this stock is. And this is how serious I am about just looking at charts. I had no idea what the stock was. I even got a kick out of it. I go, I've been saying UUUU all day long. I wonder what this is. And it's an energy stock. I had no clue. Didn't matter. Who cares? So here's the thing, though, the important difference to me is that while, yeah, you could have gone long, the thing is, I do not know if that's going to be flying higher. But what I do know is if it flies higher, and it just so happens you can't see it, but right through here, this is like a triple top high in the 15-minute chart. But again, because it's kind of an aggressive thing, I didn't short right there when it ran into that. What I actually did was I waited, came into the area, and you guys in the room heard me. We were talking about this one I had on the screen, and boom, and then we get this congestion on the 5-minute chart. That's what I want to see. And then actually what happened was right there. I mean, right there. It turns out to be now a downtrending 1-minute sell setup that was just crystal clear, perfect, beautiful. And I look behind me, I have all this congestion, and then there's congestion all across the board, and on a daily chart that I think is more of a short than a long. So is it an aggressive trade? Yes, maybe it's aggressive to some people, but this meets every requirement that I have in trading. As an intraday trader, I want to find areas in the hourly chart that we're not going to get through. I want to find the right entry. And the daily chart has to not conflict with the idea. And to me, this absolutely does not conflict because I would pull this daily chart out and say, this will be lower in 2 days, very likely, even in the crazy market we're in. So I don't need to give you all the numbers, but it was a decent trade today, and you can see it fell, made some money. But the point is simply that it takes knowing what you want to do, and it's in the title of aggressiveness to me, to get short right there, right? Where are we next? The next one, number 5 or 6, I'm not sure where we're on. Successful trading concepts, pursuing excellence. Patience. If there was a thing that the traders had in common in the Market Wizards book, it was patience. What he found out was that while they had nothing in common strategically, they all sat and waited for their one little thing to happen. That's what they waited for. I call it waiting for the stock to come to you. But it's just called waiting for your setup. William, part of the problem could be very simply, and I don't mean to talk down to anybody who's, I don't know if you're experienced or learning or whatever it is, but just generally speaking, it's hard to have patience if you don't know what to wait for. Is that a good statement, everybody? I think that cleans up a lot of thinking, right? If you don't know what to wait for, you can't have patience because you don't know what you're waiting for, right? You don't know if that's the right entry, if it's not the right entry, right? And you have to get over this FOMO thing, the fear of missing out. Somebody typed FOMO on the screen earlier. Congratulations. Exactly. You have to get over the FOMO thing. Yeah. Well, getting bored, that's great. Man, you're supposed to be bored when you trade. Yeah, but if you're bored, don't chase the entries you don't want. And the thing is, for you, those of you that aren't in the room with me, every morning, right? Room people, just give them a yes, that they believe me. Every morning, the stocks I'm looking at, the top 3, 4, 5, 6, 7, basically speaking, I'm sitting there saying, here is what that stock has to do for me to take a trade, right? And I'm not reacting and saying, oh, it's going the other way, let's chase it, let's do it. No, it's come down to here, or goodbye. And matter of fact, this morning, I had a lot of stuff on the screen I liked, right? A lot of stuff on the screen, and most of it was short and they all fell. I was, okay, missed it all. I can't take those entries. And you have to know what you're trading, what you're looking for to say, here is what it has to do for me. I'm going to show you an example in just a minute, by the way. I fall asleep. It must be that I will make a bad hunter. Yeah, I would guess you would be. Yeah. Were you saying that you would like that daily chart long if it were lower than? Correct, Caden. I'm not trying to say that that daily chart was weak. It's certainly a strong stock. It got accelerated too strong, and there will be more profit taking on the way down. So those tend to pop one day and then fall a couple days. And then at some point they go higher, but they're not really great pursuing because they often get tough at that point. When you hit that point in a uptrend, I tend to just want to let them go. And it may group weeks down the road or something, but to me that's not a chart that goes back on the list, like forever to me. So patience is the next one, and do we have some kind of chart thing for patience? Let me just check my notes here and make sure I'm staying caught up. I'm doing good staying caught up. Okay, patience. I better find a good grenade. Well, I do think trading should be, I've used this expression, trading should be about using hand grenades, not BB guns. I mean, yeah, some people try and get so precise, they just take themselves out of every trade. So here's an example, and I had to use from today because it was just the perfect example today. Because, again, I have people here in the room with me, and they'll vouch for me what I said. So Visa, Tier 2 gap, and the question for you would be, so I consider this a fairly bearish gap, right? Didn't trade it initially, wasn't really, as a matter of fact, I think somebody showed this to me later because I kind of missed it. I didn't have it on my screen. And they showed it to me right in this area here. And wow, look at that. Tier 2 gap, and there is a breakdown play. What do we think of that breakdown play? And there's going to be two little lessons here. What do we think of that breakdown play? Entry on the breakdown, stop to the last pivot up there, make a ton of money on that. Big gap, could fall forever. Nobody's going to answer because they're not sure. They're not sure which way I'm going with this one, so they're going to be very quiet and say, I think I'll just listen for a little bit. Well, if you did that entry, it would have stopped. So let me go over a big concept in trading to me, and this is really a up there thing. This is the type of thing, it's a good talk with the seminar people, and you may or may not appreciate it if you're not there. But I said I was not going to take that breakout. Why? Because it's not my entry. Because to take that breakdown means that I could someday. See, it's not that is impossible to do. It's that looking at the chart, looking at the setup, looking with the skill that I have, good or bad, right or wrong, you all have some skill. I made a decision, and basically I always would on the stock, that it's not worth taking that. In other words, you have to make the decision, would you rather miss this than take a stop? And that's something you have to ask yourself. I knew this was very likely to be able to shake out and come back in the base. And if I took it way down here, I didn't like that. So what I waited for it to come back. So I watched it break down, because that would have stopped out if you used that stop there, right? It went over the whole mid-morning base. And then I shorted here on this little sell setup. But because I was way up here and not way down here, I threw my stop up to there. How carefree is that? So I'm not sitting here sweating bullets and wondering what's going to happen. And of course, somebody in the room yelled at me and yelled at me and yelled at me because I didn't wait long enough. But here's the thing. Up here, it is quite possible to me we could have dropped right there. You see what I'm saying? And I don't know if you're getting everything I'm saying here, but to me, we could have dropped there. And now at this point, I felt I would have been madder missing that than taking it. So here, in other words, the odds flipped in my mind. Does this make sense to you guys? Now, where do these odds come from? Well, it comes from my technical chart reading skill. I'm not saying mine's better than yours. I'm just saying we all have it. And whatever skill you have, you may have to make a decision. But here's the big thing. William, et cetera, all of these. You can't have FOMO being part of your decision-making process, right? Chill on the technical concept for a minute, right? Let me explain something to you. There's so many traders that, time out a minute. I talk about that three-legged stool all the time, right? One, two, three. And the three-legged stool says that one of them is superior technical analysis, and one of them is math and probabilities, and one of them is psychology, right? So I know traders that are at like a 97% level on reading a chart, and they can't make money because they have zero of this, and maybe not so good of this. And there comes a point where it's not that I'm right on this chart or wrong on this chart. It's that I knew what I wanted to do. I followed my plan and it came out to be successful rather than just having the chart just suck me into something when I wasn't ready. That's the point I want to make first. I'll answer your questions, but does that make sense? Because I don't like shooting BB guns, like somebody just said. I like throwing hand grenades. So I want to get my stop, up here, not right there, not right there. I want to get it up there. So there's no sweat. So the only way I stop out of this is if I'm wrong on the entire gap. If this turns out to be a bullish gap, if we end up, let me get blue in here. If we end up flying higher and I'm just wrong, okay, I'm wrong. I got the chart wrong. I lost my risk amount. I'm done. But if I'm not wrong, I don't want to lose money. As a matter of fact, it's not acceptable to not make money if I'm right. When you're right, you have to make money. So it turns out, of course, then that is, was the good entry is a compromise entry. So I got in, and if it would have fallen right here, if it would have fallen right there, I was golden. And if it came back to here, never came that close to my stop. I mean, honestly with you, I probably would have bent my stop a little bit if I needed. It depends how it got there a little bit. And it goes on, and you can see I'll pull up the 5 because that's a 1-minute chart. I'll pull up the 5-minute chart. So on the 5-minute chart, there's about where I got in. Stop was up there. And then, of course, it took some time, but then goes into free fall mode. I wasn't even there. I walked back. I literally walked back to look at the screen just after it bottomed here. And I had preset a target 1 there. I got it. And I botched up the rest of it. But you get the point of it here, right? Give it some room to work, and that is what you see the trade clearing. Give it some room to work, and that is where you see the trade clearly not working. I'm not sure. Well, let me go back and take a couple of your questions. You're asking some questions about the chart here, so let me go back real quick. So back to, was the key the hourly JD? Yeah, I talked about that. There's a major resistance area. That was nice, but the point was that rally should have sold off whatever was there. And wait for the zebra, the gimpy leg to come. Exactly, Roger. Are you saying, Caden, are you saying you like that daily chart? Oh, no, we talked about that. I went back too far. Better to find a good grenade, sir. Is that a probing kind of price movement, William? I don't know what that means. I don't know if that's a technical term you pick up somewhere. I don't know what probing price movement means. And Kevin, do you see more build-up pressure closer to the bottom of the base? Well, I don't know what that means either, but the problem is just very simply that you get a lot. Anytime you have a base, guys, it's sometimes it's very rare, but sometimes you want to play the breakdown or break out of the base, but you have to know what you're doing. 95% of the time, I want to take my trade at the other side of the base. That's the professional way to do it. If I want to get short, every whoever can short the bottom, but you end up with wide stops and a lot of stop outs. It'll work sometimes. I'm not saying it never works, but you have to really pick the right ones, and most people don't know which ones to pick. So you're always, and this is one of these cases, you've heard me say the expression, trading is not about being right or wrong, it's about making money. And this is another example where math and probabilities comes in and overrules your chart knowledge. And what that means is, let's say we disagree about whether or not this is a long or short in general, this whole gap down. If we disagree about whether this is long or short, you know what that means then? It means that there are now 2 correct things that you could do. If you want, first of all, you don't have to take this trade at all. But there's 2 correct things you could do. You could short the top, or you could buy the bottom. Either way. And at least you have a chance. But if you're going to be buying the breakout of the top and shorting the breakout of the bottom, you're not right very much. And you have to be really right to make a little bit of money. When the market is probing for sellers or buyers to test trades outside the base. Well, yeah, okay, well, here's the answer to your question. The way I would phrase it is that what we're always trying to do is not trade what happens. We're trying to trade the reaction to what happens. Does that ring true with you, sort of? I think that's exactly what you're saying in different words there. So we break below the base. What's that reaction? Could be I could have wanted to short that. I probably wouldn't have done that one because I didn't like where it was on all the charts well enough. But that's the point. So I'm going to move on and take a look at the other side of the equation. Now, everything we've gone through so far are some key points that I think that successful traders, traits that they have in common if you're striving for excellence. What I want to talk about now is the other side of this, which is just as important because maybe you recognize these traits, and while I'm telling you I think they're poor traits, maybe you don't agree, that's fine, but I'm just giving you, for whatever it's worth, some common concepts of newer struggling traders. Here's number one, well, and these are not in any particular order. This is just a random list. As a matter of fact, there's so many of these, I couldn't come close to actually detailing all these, so I kind of put a list at the end a little bit. Chasing shiny objects. I don't know if I want to actually ask you to volunteer this, but as I get into this chasing shiny objects thing, let me tell you a typical newer person right now. There's probably there are a lot of people new to the market this last year, right? We know that. And there were a lot of people new to the market in 1999 as well, probably even more so now. Again, if you want to put a number one on the screen, if it's you, that's fine, but I really don't need or want you to expect you to say a one to this because it probably, because the conclusion that I'm going to have here is not going to be complimentary, but just so it rings home with you if it's you. If you are out there trading and you're kind of just new, I would bet you this is a typical trader right now. You're kind of out there swing trading, you're kind of holding for a few days. And I bet you that you have a bunch of really big winners. And I also bet you that you were only up a small amount of money or maybe even or down a small amount because you also have a really big amount of losers. I'm going to draw on the screen here. So here's the market we're in right now, where we're just kind of like, just really kind of wild stuff. Stocks, just meaning. So if you get something right, you can make a lot of money. It's great. And people just kind of hang on. You get something wrong, you also can lose a lot of money, right? Well, the thing is that when that stops, when the market goes to normalcy, whatever you want to call normalcy, right? Well, all of a sudden your winner isn't such a big winner. But the funny thing is your losers still end up being the same size loser because you hang on to them. And what happens is that people right now, we have what we would call, they have very low Sharpe ratios, but a high batting average. They hang on to everything. And they're maybe getting 7 out of 10 trades right, but they're not making money because they have these huge losers. And what happens is when the market doesn't give you the gift of the big winners, you're left with the losers. And this is what happens to people. So if that sounds like you, just a heads up, you've got to be very careful. Everybody says, oh, it's not going to happen to me. I'll know how to react to it. But, when things change, and even right now, if you're hanging on to big winners and bottom line not making money, that should be a heads up to you. So I put that there because it's kind of in the category of chasing shiny. I mean, I discussed that there because it's kind of in the category of chasing shiny objects. It seems like the thing to do. What an easy way to make money on a stock that goes up 15% in one day. And if you've heard me talk at all, I'm just, very much against this. And again, this is where some of you may be out there and you do this successfully. Okay, that's great. If you really do it successfully and you've proven it over time, but I think it's a very small amount. I know a lot of people try this, right? I know a lot of people try this. So first of all, I just had to put this in there because this came into my email today. I pretty much clean out my email of all the junk, but here's what came in my email today. Hey there. Oh, I didn't, hopefully the company's not on here. I cut all that out, I think, but hey there. Look at this once in a lifetime insane 5,100% chart. 19-cent trade shoots up to 51 times. And are you ready for this? This is from a real trade recommendation. It's a real trade recommendation. It's not a fake trade recommendation. It's not a false. It's a real trade recommendation. It was only sent to a small circle of readers. Hush, don't tell anybody about this because this is a secret trading style. You could have gotten in for 19 cents. And now it's up to $10. That's a 5,100% gain. $1,000 to $51,000. It's not an options play. Just what is this weird way to trade? Unfortunately, this attracts people, and this is the biggest bunch of crap. I don't need to tell you that, but I just had to put it in there because I got in my email today. It was kind of like Kitsby had to do that. So here's a stock from today, and thank you to room members for helping me find one, even though I think I ended up finding one on my own here. Here's a stock today, right? 22% rise today. So let's just go at the end of the day, find the stocks that are up 20, 30%, and let's figure out how to get in those, right? What a great way to trade. Of course, I've been trading for 22 years, and that's the last thing I want to do. But, maybe it makes some sense to some of you. First of all, I don't even know why you'd be looking at the stock because it didn't do anything in the morning. But let's say you were looking at it, and you can see how much the stock is moving, right? I mean, this is a $25 stock that moved for $3 in 5 minutes. Boy, you can make a lot of money with that, right? You could buy, a moderate amount of shares, $25 stock. Boom. So here comes the first setup here. So here is what we would call, and actually that does look pretty good. I mean, that's a decent buy setup. Had a nice pop here, cleared some prior days, pulls back. So you get in on your buy setup, right? Whoops. You stopped out on your buy setup. Whoops. You know what? I probably shouldn't have stopped out of that, right? I got out right when I should have gotten in. Let me get in again. Oh, whoops. Stopped out again. Down two. And then that actually was the entry for the rest of the day. So when you look back at this trade, you're going to tell me, oh, yeah, well, Paul, I would have waited to right here, and then I would have got in with $1 stop, and I would have made 6 times my money in 30. Okay. At the end of the day, it's real easy, but I got to tell you, this is not the way to make money because you can't trade that because it's all over the map. Do you understand what I'm saying, everybody? A $6 move, well, here, I'll give you a quiz question. Like that, you remember the AU trade? Well, whatever it was, let's just say you have a 20-cent stop on a precise little stock that just is, just precise little stock. You have a 20-cent stop and you make 60 cents. And the trades millions of shares, so share size is not a problem. Or you have a $2 stop and you make $6. Which one makes more money? Which one makes more money? Boy, we're a little late, guys. I'm going to be 10 minutes over. I'm never over. It's your fault. You all ask too many questions. Which one makes more money? 60 cents on 20 cents or $6? Yeah, the same money, right? Except on this one here, you don't have to stop out 3 times to get to where you want to be. Now, I know you can find, look, I like charts that are moving, obviously. I don't want to be bored to death, but precision is the key. Precision, a stock that is liquid, and reading the chart, and that's what you need. I have no desire to look at these. People put them in the room sometimes. Stock's up 20% for the day. Stock's gapping up $17. I don't know what to do with them. So I think that is one of the downfalls for newer traders. Downfall number 2. Most common email. I kind of mentioned this to you already. Most common email. Hey, Paul, I've been following you and attending your free events and trading my own. My biggest problem is that on my best trades, I end up getting out early. I feel I have to sit there and preserve my profits. It's not your job. It's not your job to preserve. What's the job of preserving your account? What is the one thing that has been entrusted with the responsibility of preserving your account, everybody? Your stop. Yeah. You've taken a trade and you said, you know what? I'm going to risk this much money. And you should have the attitude that when you enter that trade, you've spent that money already. It's been spent like you bought something. You bought this trade. It's $200, whatever you're risking. Hopefully in the beginning, you're risking like $5. And that money is gone as far as I'm concerned. If it just so happens that somewhere along the road this makes me money, that's great. If it just so happens that I get my $200 back and nothing more, that's great too. But that's the attitude you have to have. Your job is not to sit there and preserve profits. Your job is to do the managing act of balancing, getting to a target, and preserving profits when it becomes clear and obvious you don't have the right trade. Jason, you can email me. I don't have time to go into it, but it's an unanswerable question because it depends. When you're talking about percent return, it talks about your base amount. I mean, you could be a prop trader and you can be making, I don't even tell you the numbers because it'd be silly to talk about them. If you put $5,000 in a prop account and use $50,000, figure it out yourself. Make $1,000 every 2 days. The percentage, we don't talk percentage typically in day trading. We talk how many R units you make because the percentage depends on the margin capability you have, which could be 4 to 1, it could be 10 to 1. Some people get 20 to 1 sometimes. So, most common email, boom, boom, boom. Next one. Struggling new trader. The market is rigged / is not my fault. Number 1, the market is not rigged. Number 2, everything is your fault. You're responsible for everything you do. Okay, everything. If your spouse comes in and interrupts you in the minute when you're supposed to take your stop loss, and now it's your spouse's fault that you're holding onto a trade for 5 days and down a third of your account, that's your fault. Use an automatic stop, put a lock on the door, get a different office, marry a different spouse, whatever you need to do, but it's your fault. It's your fault, up and down, period. Everything is. The market is not rigged. It just is difficult for people who don't have a clue what they're doing. So you have to blame somebody. I couldn't find it. When I was looking something up and I came across an article that basically said that you really can't trade anymore because of the dark pools. And I was like, OMG, who wrote this? I trade every day. And yes, there's dark pools out there. That's what trades most of the market, but who cares? I can get in and out of any stock I trade anytime I want to. I don't even know what these people are talking about. Sometimes I think I'm in that bizarro world from Seinfeld. It's like, what are people talking about? You can't trade because of dark pools? What? I'm trying to today, William. I'm trying my hardest to beat you over the head, so you got to give me credit for today. And look at how good I am at doing presentations. It's 6:01, and look what the slide says. I want some credit for that. I imagine I'm out of time. That's hysterical. Dark pools make trading unfair. The grass is always greener. That means the grass is always greener. There's a whole article. If you go to the free stuff page, there's an article at the bottom. There's articles there too, by the way. You probably never get down that far. It's called The Grass is Always Greener. But what that means is that you try trading stocks and it doesn't work. So now I'm going to try trading futures. Now I'm going to try trading Forex. If you can't trade one thing, you can't trade the other thing. They're all the same. By the way, that's one of them I didn't put on here. Learning to trade is the same, guys. For futures, for Forex, for stocks, and trading options has nothing to do with options. Trading options means you have to learn how to trade stocks if you're trading options on stocks. The math of options is a piece of cake. Don't ever let somebody tell you that you have to learn different technical things for different asset classes. And also, don't ever, does it say it on here? I left a couple off here. Yeah, also don't let everybody ever tell you you need to learn new strategies for the new market. If you ever hear that, turn and run. Have you heard that? Is that still out there? I don't really look at emails anymore. Is that still out there, guys? Do you get emails? Learn new strategies for the new market today? Do you see stuff like that? I mean, it's from all over the place. It's not like I'm not picking any one place, but do you see those still? No? Yes? No? You do? Yeah. That's just insanity talking. There are no new strategies for you learn you learn how to read a chart. Period. You develop your strategies and there's nothing new to learn. You don't learn the cookie cutter double Heimlich crossover trade and then it stops working in 3 months. You go learn another trade. It's ridiculous. Struggling trader. After 2 years of trading, I'm working on my trading plan. I don't even want to say any more about that. I'll start tracking my trades when I have more money on the line. Oh, boy, is that not a backwards way of doing things? I'll be cautious, so I'll limit my risk and raise my stock quickly. Again, tricky there. You're not being cautious by raising your stops. What you're doing is you're taking yourself out of the process of making money, unless it's appropriate. Don't get me wrong. There's times it's appropriate, perhaps, to raise your stop. All I'm asking is that you closely evaluate every time you've done that if you made or lost money from doing it. And if you did make money from doing it, from raising your stop, the next question is, are all your trades so bad that raising your stops saves you losses on all your bad trades? That's not a good thing either. About that, being cautious on limiting your risk, that's part of a event called from, it's on, you know what, it's on the Hall of Fame section. It's one of the ones I highly recommend. It's on the Hall of Fame. So from Chart Reader to Trader Investor, it talks about that even though that seems like being conservative and limiting your risk at some point when you want to make more, if you're doing good and you want to make more money, slowly increasing your risk is the way to do it, not taking more trades. It's mathematically, it's just the only answer there is. But people don't like to use math when they trade for some reason. Conclusion, it's up to you. I want you to remember, when you're trading, you're running a business. This is a business. It's not fun. It's not supposed to be entertaining. It's a business. You have to learn what you are doing. Boy, what a concept that is. For some reason in trading, that doesn't make sense to people. You have to learn what you're doing. What a novel concept. You have to check and see if you're doing what you're supposed to be doing once you learn what to do. You have to know if you stray, if you're still doing it right. That's a big one too. You know, when you're on your own, it's sometimes tough to know if you're doing it right because you're the student, you're the teacher. At some point, ready for this one? At some point, discipline is between your ears and no trick will work. Is that true or not? At some point, discipline is between your ears and no trick will work. Yeah. The biggest tool to have discipline is to have confidence. Believe me, it is. When you have confidence, if you knew that trade was going to go up $1 today, you wouldn't be sitting there managing it, right? Now, we never know that, right? But if you don't have a clue what's going to happen to it, you want to protect every penny. If you have some reasonable idea it might go higher, well, you'll probably still be too tight. But if you have a real good knowledge that, hey, that's a good trade, I'm going to let that go where it's supposed to go. People don't have that. How do you get confidence? Well, go back to the top of the list. I do just want to throw out here, and I don't normally do this because these are not, but I do want to throw out there for those, because there's so many people that don't even understand. I try and do what I can free stuff-wise for people who are trying to learn, who want to learn on their own if you want to, and for people who are not ready to learn yet and they're just sticking their toe in the water. But there is a full-fledged seminar program here that is the best you will ever take anywhere. So if you're interested in that, it is here. And I don't push it or talk about it a lot, but there's people that have asked me if I do any training of any kind. And if you want, there's an email that went out. I had what I called advertising week at a couple around Labor Day or something. I apologize for sending out, but people didn't know a lot of stuff DTS does. That's the email from that week talking about seminars. So if you want to read about seminars, there's an email that refers you to a couple other links. That's everything you'd ever want to know. I find swinging core trades, I'm able to be chill. I have no problem setting targets right. Yeah, that's very true, Ken. It's very true. It's for the very simple reason. It's what I call the idiot concept. By the way, guys, I'll officially say we're done, but I'll take all the questions you want. Just for those you want to leave, my presentation is done there. And naturally, hopefully you all know about the free stuff page there. So I'll sit here for an hour with questions if you want. It's what I call that idiot effect, is that if you're not with the market during the day and you come home and you have a swing or a core trade and it does blah, 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 whatever it does, and you're happy or you're upset or you're thinking of doing something, your initial gut reaction, Ken, right, is probably, I want to do this, right? You see it after market. Oh, I should have sold it. Oh, I should have, And then night goes, the next morning comes, you sleep, you get up, and you go, and you know what you end up doing? You end up doing what you're supposed to do because the reasonable Ken takes over the idiot Ken. The problem is during the trading day, idiot Ken's in charge the whole time, right? All we can do is just at the end of the day is kind of grade idiot Ken to see how he did. And we find that a lot of times idiot Ken didn't do that good. Agree? Everyone? Did you get that concept? So everyone is better at longer term in terms of management. You still may not be good, but you're better than you are day trading, right? During the day, yeah, probably, yeah. Yeah, long term, I'm almost the other extreme. I just kind of, whatever, let it go. I try and hit a good compromise day trading. I'm always very weary of if I manage something that did better by the end of the day. I'm always a little worried. I'm always worried about that, always trying to acknowledge that. Change if I need to. Remember, you can't change everything you do based on one trade, right? Because you may improve that one trade at the detriment of the next 10 trades. So you have to be very careful that anything you change that you do is encompassing all of your typical trades. Any other questions, anybody? All right. Thanks, guys. If you're in the room, I'll see you tomorrow. Those of you in gaps in the seminar program, I'll see you on Saturday for gap class. You have to look at the calendar. I'm not even sure when the next event is. Have a good one.